Hello traders, my name is Logan with Funding Talent, and in this video we're going to be going over the market forecast for the week of July 12th. In this video, as we always do, we're going to highlight the best fundamental drivers to stay away from in this upcoming week and the best technical setups, so hopefully at the end of this video you can take some valuable insights and maybe apply them into your own trading in this upcoming week. So without any further delay, let's get right into the video. So here we are on our slideshow, traders, and as we always do, we're going to get started with the high impact red folder news in this upcoming week, which there is a lot of, as you can see. On Monday, we start off the week with no news, but on Tuesday, we do have some news, 8:30 a.m. EST. We have some USD news, which is our CPI and core CPI numbers. 10 p.m., we have some New Zealand dollar news. Moving into Wednesday, we have news at 8:30 a.m. again for the US dollar, as you'll see that'll be a habit of this week. And then at 10 a.m., we have some Canadian dollar news. 11 a.m., more Canadian dollar news. 12 p.m. USD news, and then 9:30 p.m. Australian dollar news. And if you're an exotic currency trader, 10 p.m. Chinese yuan news. Moving into Thursday, we have some more news at 9:30 a.m. for the US dollar. 6:45 p.m. for the New Zealand dollar, and tentative JPY news when we have the BOJ outlook report on Thursday. Friday, more tentative JPY news and some more USD news at 8:30. So besides for that, if you're around those times, be sure to tighten up your stop losses, lower your lot size, and be careful. But besides that, you should be fine in this upcoming week. So for the news of this week, the Canadian employment change was $231,000 as opposed to a forecast of $175,000, which is really, really great for the Canadian economy, and the Canadian dollar showed that by strengthening shortly after. Besides for that, Biden this week issued an order with 72 initiatives promoting competition within the U.S., which is fantastic news to keep an eye on. Also, China cuts the reserve requirement ratio for banks, which essentially means that the Chinese banks can spend their savings and invest them elsewhere. And the European Central Bank's Weidmann said that they will not seek inflation overshoots on purpose, so they will not be looking to increase inflation unless they absolutely have to. So all of this good news obviously feeds onto a risk-on market sentiment, which for our newer viewers says that expectations are higher for further economic growth. And for our currency traders, that means that we can expect the New Zealand dollar, the Canadian dollar, the Australian dollar, the euro, and the pound to appreciate if we continue with this risk-on market sentiment, and good news continues to roll out regarding the economy. That being said, for our indices traders, as this continues to play out, we can expect indices globally to continue to appreciate as well. Now we'll move directly into our trading setups for this upcoming week. Starting off with XAU USD gold, we're looking at a long opportunity. So 2 weeks ago, we were looking for a reversal because we had a very impulsive wave right here. At this point, we're looking for a reversal around here, which we did obviously get that reversal, a little bit more steeper and larger in price movement than we initially thought. But either way, my bias is still going to maintain long on gold. Moving into XAG USD, silver. As you can see, we have been finding some consolidation around this level. Nothing has really changed from last week, but for anybody who was not watching this last week, what we're looking for is, what we do on this is we take higher time frame analysis combined with Elliott wave theory, chart patterns, candlestick patterns, Fibonacci lines, everything we can really to give us the highest probability trade setups. And in doing that, one of the factors is looking at alternative counts, alternative ways the markets may move, because you can never be set on one way, because the market obviously is always going to throw curveballs at you, and you need to know how to react. And having alternate counts allows you to react easier because you've already seen this as a possibility. So what we're looking at now is our corrective wave playing out and taking us lower if we get a breakout of the support line, or we get an invalidation of that by moving higher, by breaking this resistance line or breaking above this level at 27.88, which will then mean that this red scenario, which is a bullish scenario, will play out as opposed to the black bearish scenario. Moving into US 30, what we're looking at here is a triple top and a divergence on the RSI. Not yet 3 touches, but what I've learned in my trading experience is 3 touches is a very high probability way to look for reversals. So if this gets our 3rd touch to the reversal line on the daily chart, the divergence line on the daily chart, then we can expect price to reverse. But obviously, we're at a resistance fractal right now where we can expect price to move lower anyway. So my bias is going to be short on US 30. Moving into USD JPY, about 2 weeks ago, we called out a long opportunity, and that took us higher around to this level, and then we called a short opportunity, which worked out fantastic. If you were in this trade, congratulations, because it worked out phenomenally well. Your take profit would have been right here and hit before we had this small retracement and then moving lower. But now what we're looking for is a continuation to the downside. Before that happens, as we had a very impulsive wave right here, we're looking for a retracement of that wave, retest this support line turned resistance of this multi-month channel that we've had, and then a push lower, which would then take prices lower. So my bias is going to be short on USD JPY. For NZD CAD, we called out this opportunity last week as a long opportunity, which worked out fantastic. We were on this level as we broke out of this channel, which is essentially what we were just looking at on USD JPY, but on a smaller scale. And what we had then after was a very strong push higher. And if you would have not gotten out here, you had 3 opportunities to get out at the high. So hopefully you did. And my bias is still going to maintain long on NZD CAD because this looks really great to continue to move to the upside. For synthetics, this was our chart of the week 2 weeks ago. We were around this range right here. Price then obviously moved higher. And since then, last week around this level, we came a little bit higher, then it came lower, forming our 4th wave in our Elliott wave 5-wave motive pattern. And since then, there was another opportunity to add in right here. As you can see, this was our reversal zone. We get this by measuring the 38.2 to the 61.8 of our previous wave, which was right here, as you can see. And right now, we're looking for our next move higher, which will be our 5th wave. So my bias is going to maintain long on synthetics. GBP CAD was our last trade last week, which was actually the only one that did not work out. But if you were a normal watcher of this channel, you would know that this trade hit about 1-to-1 in terms of our risk to reward ratio, because there was 2 support fractals that we hit right here. We obviously found a middle ground between those 2 and then moved higher directly off of that, and it would have stopped you out if you were not paying close attention to this trade and using proper active trade management. But if you were, you would have gotten out either a break even or with a small profit, because this trade obviously did present an exit signal, but also is 1-to-1 risk to reward ratio. And around that level, what we like to do is close a portion of our position or move our stop loss to break even. So traders, that was again the market forecast for the week of July 12th. I hope that you guys really pulled out some technical setups that you can apply in your trading this upcoming week, and the best fundamental drivers. As we saw, there is a lot to stay away from. So if you're not already following us on all of our social media platforms, be sure to do so, because we're releasing new content every single day across all of our various platforms, and new videos just like this will be coming out on YouTube very, very shortly. So as always, on behalf of everyone at Funding Talent, happy trading.